Hey all, welcome to this episode of A Good Problem to Have. I'm your host, Tyler Olson. We're in our second part of 8 mini-series that's specifically designed for those of you that are transitioning from medical school to intern year. By the time you're listening to this, you'll know where you matched, and I hope it was where you wanted to be. I know it's a very tumultuous time, career-wise and emotionally speaking. And so I hope that you're getting the support that you need. Many congratulations to all of you who were able to successfully match. And having passed that now, you're having to continue to make some more consequential financial decisions. And last week, we talked about federal student loans. This week, we're going to be talking about private student loans or private debt in general. For those of you that attended medical school, and there's a contingent of school systems that do not qualify for federal funding, and so you have to get your loans from private lenders, and those options admittedly are not as great. The interest rate tends to be higher, although not all the time. And you may have access to an institutional fund too, like you may have some federal loans, and then you also have some private that you needed to supplement because the federal loans were not enough for your living. In any event, the reason why we are segmenting off these private loans from federal is because the rules are different and the decisions are different. There is no provision for public service loan forgiveness with private loans, although there can be some state-specific forgiveness programs that can apply to any type of student debt, even private loans. So that usually is something that would be pursued after your training. So that's more of like a longer distance discussion. But what do you do now? Got to manage the cash flow, because you're going from zero income to 60, 70, 80,000 a year, which of course is great. That you're earning an income now. It's not a lot of money though. And so if you have some private debt or a lot, you really need to pay attention to the terms of your loan agreement. And that is basically what I mean is what you have to pay every month and when you have to start paying. You want to be careful about refinancing this type of debt. I know that's like a go-to option because say your interest rate is 9% and you could get 5%. Obviously that would be better, but you have to be careful about the terms, because usually when you refinance, you're going to be refinancing to a new set of terms that might require a payment that you cannot afford. And perhaps your existing institutional loan or other private loan of some kind has some terms that are favorable, like you don't have to make any payments for X number of years. That might be helpful to you depending on how long your training is going to be. It may or may not be enough time to bridge the gap between your low income in training and your post-training attending income. So you have to look at those parameters, your career trajectory, how long that's going to be in training, and what the terms of your current loan are. Conversely, there are some private lenders that offer a resident-specific type of loan, and these lenders, they know what they're doing, because they know you doctors don't make much now, but you'll make a lot more later. And so some, like Laurel Road, for example, they have an offering where you can get a resident loan where they'll refinance your debt to be with them, and then you only have to pay about $100 per month while you're in training. And I believe the maximum is like 7 years. So, unless you're, planning to be a, like going into like cardiology and then further subspecializing into, electrophysiology, or if you're going to be a neurosurgeon, where training is going to go well beyond 7 years, that time frame may work very well for you. But you just gotta look at your specific circumstances. The benefits of this: one, the interest rate may very well be lower than what you're currently at, but it might not. It just depends. You have to compare what's my interest rate now, what are my terms, and what are the offers. And then the end game, of course, is right now, while you're in training, you want to be able to just tread water. So low payments, yes, interest will accrue, whether it's a 5% interest rate or a 9% interest rate. But at $60,000, $70,000, $80,000 a year, there's not much you can do about that right now anyway, right? So you have to be able to accept that reality, as difficult as it is, that there will be more debt to pay off by the end of training than there is right now. But you will be equipped, much better equipped, to address it with your attending income. I've seen it time and time again. You just wallop it like it is doable. Just you gotta let the time pass and redirect your attention, as hard as that might be. Then, after having considered these options, then you need to make the decision that's best for you. That's going to save you interest expense if you can save on the interest rate. That's going to provide you terms that will make the required payment manageable for you on your household income. Then make the decision. So those are the steps in terms of private debt. Now, within this realm too, you could include credit card debt, and that itself is also not too dissimilar comparisons that you want to make. But of course, credit card debt, the interest rate tends to be a lot higher, unless you're in like an introductory APR of 0%. But those are always short term. They're usually 12 or 18 months long. So even if you're trying to bridge the transition from school to intern year by using a 0% interest credit card, you got to have a plan for how you're going to pay off that loan, ideally by the time the 0% interest rate expires. So that requires planning and understanding, what am I spending money on, and organizing what those expenses are going to be so that you can be intentional with those purchases and intentional with that debt accumulation. And then make as reasonable of a plan as you can to get that paid off. So that's it for this one. It's a shorter one. Part 2 of 8. Post-match education for you med students, soon to be interns. Come back next week. We're going to be talking about a really, really fun topic: disability insurance. I know it's not fun, but it is important. See you then.